This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Saturday, April 25, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant's Week Ahead. The biggest catalyst this week is the Fed's rate decision on Thursday, and the market is betting on a pause, but the yield curve is screaming for more hawkish action. Equities, grid, earnings, and indices. Let's start with the macro backdrop. The Fed's rate decision on Thursday is the headliner, but the real story is the yield curve. It's normal at plus 0.53 percentage points. But the Fed funds rate is at 3.64%, and the 10-year yield is at 4.34%. The market is pricing in a 60% chance of a 25 basis point cut by year-end, but the curve suggests the Fed may be more hawkish than expected. That's a key tension. On the inflation front, the core PCE is at 2.97%, still above the 2% target, and the CPI is at 3.29%. The Fed has been leaning on the idea that inflation is easing, but we're still in a high-rate environment. Employment data is solid, with non-farm payrolls up 178,000 last month and unemployment at 4.3%. The dollar is weak, but the trade-weighted index is at 118.8, still strong. This is a mixed picture. The economy is resilient, but the Fed is walking a tightrope between inflation and growth. Equities, grid, earnings, and indices.
Let's start with the earnings calendar. This week is a mix of big tech and earnings from the S&P 500. Key names.
The key thing to note is that earnings are mixed, but the macro backdrop is still supportive. If the Fed signals a pause, that could be a tailwind for equities. But if the yield curve suggests more hawkish moves, that could pressure the market. Currencies and commodities. SPECTER.
Starting with the FX market, the dollar is under pressure, but not by much. Euro-dollar is at 1.1718, up 0.3% this week. The 52-week high is 1.1812, and the 52-week low is 1.1527. The key level is 1.1669, the weekly low. Cable is at 1.3531, up 0.49% this week. The 52-week high is 1.3652, and the 52-week low is 1.3124. The support is at 1.3448. Dollar-yen is at 159.38, down 0.24% this week. The 52-week high is 160.34, and the 52-week low is 156.21. The support is at 158.55. Dollar Swiss is at 0.785, down 0.16% this week. The 52-week high is 0.7912, and the 52-week low is 0.7724. The support is at 0.7776. Aussie dollar is at 0.7149, up 0.28% this week. The 52-week high is 0.7245, and the 52-week low is 0.6912. The support is at 0.7111. Dollar CAD is at 1.367, down 0.21% this week. The 52-week high is 1.3715, and the 52-week low is 1.3421. The support is at 1.3631.
From a crypto perspective, the dollar weakness is helping altcoins recover, but the market is still in a consolidation phase. The fear and greed index is in the neutral range, which means the market is not overly fearful or greedy. Bitcoin is testing the $66,500 level, which is a key resistance. Ethereum is also holding above $3,400. The on-chain data suggests that the market is still in a buying phase, but the overall sentiment is cautious. The key thing to watch is whether Bitcoin can break above $67,000, which would signal a strong bullish move.
Digital assets. CIPHER.
Let's start with the crypto catalysts. The biggest one is the upcoming Fed rate decision. If the Fed signals a pause, that could be a positive for crypto. The other key event is the earnings calendar, which is dominated by big tech. If the tech giants beat expectations, that could be a tailwind for crypto as well.
I agree with the crypto analysis, but I want to highlight the risks. The dollar is still strong and the Fed is not signaling a rate cut just yet. If the yield curve continues to suggest hawkish policy, that could pressure crypto. Also, the on-chain data shows that the market is still in a consolidation phase, which means we could see more volatility. The key thing is to watch the Fed's decision. If it signals a pause, that could be a catalyst for crypto. But if it signals more hawkish action, that could be a headwind.
Let's bring it together. Apex cross-market themes.
All right, let's look at the three main themes. First, the Fed's rate decision is the biggest catalyst of the week, and it could have a significant impact on all markets. The yield curve is still normal, but the Fed's messaging could shift to a more hawkish tone, which would be a headwind for equities and crypto. Second, the earnings calendar is strong this week, with big tech leading the charge. If these companies beat expectations, that could be a tailwind for the market. Third, the dollar is still strong, but the trade-weighted index is at 118.8, which is a sign that the dollar is still in a strong position. The key question is whether the Fed will signal a pause, which would be a positive for the market, or more hawkish action, which would be a headwind.
I agree with the themes. The Fed is the key player here. If the Fed signals a pause, that could be a positive for equities and crypto. But if the Fed remains hawkish, that could be a headwind for all markets. Also, the macro data is mixed. The economy is resilient, but inflation is still above target. That's a key tension.
The earnings calendar is solid, but it's not a guarantee of a strong market. Big tech is leading the way, but the market is still cautious. The sector rotation is in line with the macro backdrop. Growth and defensive sectors are outperforming. The key thing is whether the market can sustain this momentum.
The crypto market is still in a consolidation phase, but the on-chain data suggests that the market is starting to recover. The key thing is whether the Fed's decision will be a catalyst for a stronger move. If the Fed signals a pause, that could be a positive for crypto, but if it remains hawkish, that could be a headwind.
I disagree with the crypto view to some extent. The dollar is still strong and the Fed is not signaling a rate cut. If the yield curve continues to suggest hawkish policy, that could be a headwind for crypto. Also, the on-chain data is mixed, some signs of recovery but not a strong upward trend. The key thing is to watch the Fed's decision. If it signals a pause, that could be a positive for the market. But if it remains hawkish, that could be a headwind.
So the consensus view is that the Fed's decision is the key catalyst, and it could have a significant impact on the market. However, the market is still cautious, and the earnings calendar is a mixed bag. The key disagreement is around the Fed's stance. Some think the Fed will be more hawkish, which would be a headwind, while others think the Fed will be more dovish, which would be a tailwind.
Calls on the record, one each. The Fed's decision on Thursday is the key event. If it signals a pause, that could be a positive for the market. My call, dollar-yen bearish, target 158.5 by Friday.
The earnings calendar is strong and the sector rotation is in line with the macro backdrop. My call, SPY bullish, target 715 by Friday.
The crypto market is in a consolidation phase, but the on-chain data suggests a slight recovery. My call, Bitcoin bullish, target 67,000 by Friday.
The dollar is still strong and the Fed is not signaling a rate cut. If the yield curve suggests hawkish policy, that could be a headwind for crypto. My call, gold bearish, target 4,670 by Friday.
The Fed's decision is the key event, but the market is cautious. The earnings calendar is a mixed bag. My call, euro-dollar bullish, target 1.175 by Friday.
If you're finding value in this analysis, support the project at patreon.com//ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.